PantheonAI presents Powell's Next Move, Deutsche Bank's Big Bet, and Insider Stock Surge. Welcome to the PAI Morning Briefing. It's August 13th, 2025, and I'm John. It's great to have you with us.
Good morning, everyone. I'm Sarah. Grab your coffee, get comfortable, because we've got a lot to unpack in the markets today. Ready to dive in, John?
Absolutely. Let's kick things off with a quick look at where the markets closed yesterday. The S&P 500 finished at 6,456, which was a very slight dip of about 0.1%.
Right, but the Dow Jones actually had a better day, didn't it? It rallied up about 0.5% to 44,780.
It did. On the other hand, the tech-heavy Nasdaq slipped a bit, down 0.3% to around 21,701. So a bit of a mixed bag in the traditional markets.
And then you have the crypto world, which seems to be marching to its own beat. Bitcoin is trading near $121,000, up a modest 0.7%. And Ethereum is doing even better, climbing 1.6% to about 4,663. It seems like crypto is holding strong despite some of those jitters elsewhere.
It really does. Looking at these numbers can be like trying to bake a souffle for the first time. Exciting, but wildly unpredictable. The real story, as always, is what's happening behind the numbers.
That's a perfect analogy, because these gentle moves suggest investors are being pretty cautious. They're in a holding pattern, watching for the next big economic signal or policy hint.
Exactly. Let's dig into one of those signals. A big topic on everyone's radar is the labor market. We got confirmation from senior White House officials that the monthly jobs report is not being suspended. This comes amid some chatter around President Trump's new nominee for the agency that produces these numbers.
It feels a bit like watching a rerun of a classic political sitcom where you know the punchline, but it still matters. Getting that reassurance is huge, not just politically, but for the market. It means we keep that reliable stream of data to gauge economic health.
Good point. And speaking of things that matter, another headline making waves is Deutsche Bank's call to short the 10-year Treasury notes. They're essentially saying the market is way too optimistic about how far the Fed will actually cut rates.
That's a bold stance. It's like trying to predict rain when the weatherman isn't sure if it's a light drizzle or a downpour. It forces investors to ask, are the rates we see today reflecting reality, or just a boatload of optimism that might get corrected?
A question that's tough to answer. Now let's shift to a story with a lot more optimism baked in. The double upgrade of Eli Lilly shares. The CEO and other insiders have been buying up stock while it was underperforming.
And look what happened. The stock rallied nearly 3%. It's a classic case of follow the money. When insiders put their own capital on the line, it signals that they see real value the market might be missing. It definitely makes you want to take a closer look at the biotech sector.
It really does. And the healthcare narrative keeps getting more interesting. Vyome Therapeutics just announced that Nasdaq approved their merger with Reshape Life Sciences. The new combined company will trade under the ticker HIND.
That's more than just paperwork. It's a strategic chess move, right? They're positioning themselves for the long game in a super competitive healthcare innovation space. It's fascinating to watch these companies combine forces.
It is. So let's talk sectors for a minute. Tech, as we saw with the Nasdaq dip, seems to be in that delicate push-pull phase. You have concerns about overvaluation, but on the other side, the promise of AI and cybersecurity is still incredibly strong.
I like to think of it as a garden. Some plants are in full bloom, while others are just waiting for their season. You have to be selective. And what about energy? That's always a big part of the conversation.
Right. While it wasn't in our top headlines today, the energy sector is always humming in the background. The push for renewables and the current geopolitical climate create these constant ripples that affect everything. Today's market hesitation could easily be a prelude to some big shifts there.
And that brings us back to finance. With Deutsche Bank's call on Treasuries, it's clear there's some unease about where monetary policy is headed. It just proves that financial markets aren't islands. They're living ecosystems influenced by a dozen different factors.
Absolutely. And these U.S. trends have huge global implications. European investors are watching the Fed closely, and emerging markets are looking for opportunities. It's a global puzzle, and every piece matters.
So what's the expert consensus? What's the big takeaway for our listeners trying to navigate this?
The consensus is pretty clear. Resilience and diversification are key. In times like these, a balanced portfolio is more critical than ever. It's not just about stocks and bonds anymore, but also about considering these emerging sectors like digital finance and biotech.
It's like having an umbrella on a day with an uncertain forecast. You might not need it, but you're sure glad you have it when the downpour hits. Diversification is that umbrella.
I love that. Sometimes I feel like a fortune teller with a very, very accurate umbrella. You have to be ready for both sunshine and rain in these markets.
Well said. So we've noticed that a few of these key stories, the jobs report, Deutsche Bank, Eli Lilly, and the Vyome merger, have been repeated across headlines. Is this just the news cycle on loop, or is there something more to it?
That's a great question. Repetition in financial news isn't just noise. It's reinforcement. It means these narratives are critical. The unwavering commitment to the jobs report builds trust. The repeated warnings from Deutsche Bank force a risk reassessment. The insider buying at Lilly signals deep confidence.
And the Vyome merger highlights a strategic trend in healthcare. So the repetition actually adds weight to these stories, telling us, pay attention to this.
Exactly right. It's the market's way of underlining what's most important. Looking ahead, I think we'll see more of these nuanced shifts as the Fed maintains its cautious stance. The market's reaction to any policy change will create ripples everywhere.
So as we wrap up, let's leave our listeners with a few key takeaways. First, look beyond the index numbers to the stories driving them, like the steady jobs data.
Second, notice where the innovation is happening. The strength in crypto and the bullish moves in healthcare show that there are always pockets of opportunity. And third, diversification isn't just a buzzword, it's a lifeline.
Perfect. And here are a few questions to ponder over that coffee. Are you comfortable with the balance in your portfolio right now? How are you thinking about digital assets long term? And what unique insights are you taking away from today's key stories?
Great questions to reflect on. And that brings us to the end of today's briefing. A big thank you to our information co-pilot, PantheonAI, for helping us connect all these dots.
Remember, learning about the markets should be an engaging part of your day, not a chore. We'll be back tomorrow to break down a whole new set of headlines.
Thanks for joining us. Have a great day. Trade smart, and we'll talk to you next time.
PantheonAI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.